Hello everyone and welcome to TTT Markets. I am Fotis Papafeofanos, I'm a professional portfolio manager, and in this video I'm going to show you how to use moving averages just like a professional trader. It might sound like a simple topic. After all, you have seen moving averages in every platform, and almost all of the systems and strategies are available online. They do use moving averages one way or another. But are traders using them properly and correctly? So this is what I'm going to show you today, so please pay attention. And I'm going to go straight to our trading platform, which is MetaTrader 5, but you can use any kind of trading platforms you want. So here we go. This is the daily chart of US oil CFD, and I will explain in a second why I did use US oil. There is a historical background here. Let me go back in time in the 70s and explain how everything started and why I am beginning with a commodity, so you will understand the evolution of trading strategies and moving averages. And it is not random that I'm starting with a commodity. In the past, some of the best traders were commodity traders, not only in oil but especially agricultural traders. Many of the things that we use today were developed back in the late 70s, early 80s by agricultural commodity traders. For example, people that were trading coffee, soya beans, wheat, corn, orange juice, and so on. Let me zoom out a little bit. What you can see is that with the advancement of computers and electronics, you are not trading against humans. Right now, I have zoomed out a lot and we are going back to 23. You see price action looking like this, up and down within a range. You are not trading against a human. But back in time, back in early 80s, we used to have very strong trends like this across commodities. Trends were persistent and they were strong. So if you had a way to capture that trend, that would be fantastic. You would be way ahead in the game. And there is another factor why this trend following approach would guarantee success. Because remember what I said, you were trading against humans. You were not trading against algorithms or other kind of systematic strategies. So people were coming up with ideas how to trade this, and they started using moving averages more often. And I will show you how they were using moving averages. And of course, the big breakthrough was when the US 500, the S&P 500 futures contract was introduced. So I will do this. I will go over here. I will do this. So I will switch to US 500. This is the S&P 500 index. And I'm going to use our first moving average. So I will go here to trend, as you can see, and I'm going to choose, where is it? There you go, right there. I will move this here so you can see. I will use a 31. This is one of the most popular moving averages that was first used, the 31-day exponential moving average. Initially, they started with the simple, but some folks came out and say, look, the exponential is following price action more closely. So what the simple will do, it will take the last 31 values, it will add them and divide by 31. But the exponential, it will pay more attention to the most recent prices. I think I have clicked, 1 second, no, let me, 0. We don't want this to shift, right. So this is the moving average. Can you see how closely it captures the trend and how closely it follows price? This is beautiful, especially in a market that has a strong trend. So if I zoom out, what was the first strategy? And I'm hitting F11 again, so we can see the bigger chart. The price moves up as long as it is above the moving average, we go long. And look at this. Simple, isn't it? It moves below the moving average. Sell. It's that simple. These are the kind of strategies that they were using. But again, as I said, with the advancement of technology, with algorithms, with systematic strategies, things are moving very fast. You can't, it's even, they are saying that it is even faster than blinking. So they had to come up with other kind of strategies. A little bit more adaptive. So what did they think? One of the first professional traders that introduced a proper strategy that had very specific rules was Bill Williams. And if you go here, MetaTrader is having a dedicated section where you can find all his indicators. And he introduced a specific approach, a specific strategy. He's applying the alligator. Let me click reset back to the original. So it is a combination of moving averages. He used the oscillator, which is nothing more, sorry, not the oscillator. I want to remove this. I want to use for now the awesome oscillator. And the fractals. And I will choose black so you can see. And click F11. What is this strategy about? It's very simple. He gave us very specific rules about how to use moving averages. He called this the alligator. It is a set of smooth moving averages. The fractal is measuring the last highest high and lowest low, 3 bars on the left and 3 bars on the right. And he said this, right, when the price is moving below the alligator and it breaks below the latest fractal low, which is here, you sell and you place a stop above. Beautiful, isn't it? Look at this. If the price is above the alligator and the awesome oscillator is green, you can see this here is green, and we break the latest fractal high, we go long with a stop below. And he said, don't do business when the price is inside the alligator. It was simple as that. And it was working because there was very strong trend. Commodities, futures. Back then, before the year 2000, we had very strong trends. And you might look at this now and you say, well, it works now. Yes, it will work in indices, especially in bull markets. Because in a bull market, buying the high always works. But here is a catch. You don't see trading market like this all the time. In fact, it is less than 30% of the time. So what I will do is I will click properties, I'm going to choose chart auto scroll, and I will go back and choose a period where the price is moving sideways. When the price is moving sideways, this approach is not working. And if I choose another instrument, for example, Euro USD, look at this. It doesn't work. There are periods that you think, right, it is moving above, fractal high is broken, the awesome oscillator, which is nothing more than the MACD, really. We just see the histogram of the MACD. It is moving up, we place the stop, it moves up a little bit, then comes down. These kind of trend following strategies, and you can do any kind of version, any kind of combination, they will not work when the market is moving sideways. So what can we do to improve this kind of approach? So I showed you right now, we did a little bit of history. We went back in time and showed you some of the first strategies. This is what I'm doing. This is the way I approach this. I don't really need the MACD, so I will remove this. I don't need this indicator, the alligator, and I will show you how I'm using this. So this is Forex, this is FX, this is the Euro. I will leave the fractal for now because it is useful for risk management purposes. I start with the daily. So start with the largest time frame and then move lower. What am I going to do? I will go over here to trend and I will use the moving average. Trend, moving average. What moving average? I will switch it to blue. I will do this, and I will start with the 21 day because the month is having 21 working days. And I click blue. I will click again. I'm choosing magenta, and I will use 63 because this is roughly the quarterly period. A quarter is having close to 63 working days. Click OK. And the last one is the 200. And now I choose green. And I click again F11 so you can see the big picture. And this is what I will do. And please make sure you write down those rules. The price is above. Don't buy yet. We have a break above moving averages. The EMAs, they are shifting. The slope starts move to the upside. Great. Now wait, we have a breakout, we have a strong trend, don't buy here. Why? Because it is all about the reward risk. It's nothing else, it's the reward risk. Wait, it goes to the 21-day moving average. Now you buy. You see my point? And have a stop below. And look at the reward risk. The reward risk is changing dramatically when you start doing this. Do not attempt trying buying a breakout of a high. You might do this if you have extremely significant news that you cannot ignore, but overall it is a better approach to wait and buy at the pullback. So we buy here, up. You might say, well, it touches the 21-day here and it doesn't work, it moves lower. Yes, and this is why I am scaling in and scaling out. So I will not buy with all my position power, with all my clips here. What I do, I break my position in 3 clips. So it doesn't mean that I'm trying to average in. So I am not adding to a losing trade. For example though, if I have to risk 1% of my account, I risk 0.33 here. And then over here, as it approaches the second MA, another 0.33. And I'm improving my entry. And look what happens. It moves up. So this is very profitable. It moves up. This one is also profitable. And then I scale out. This is what I'm doing. As long as the trend is up, I don't have any kind of idea of going short. I'm not going to do this unless I use some other kind of strategies where I employ also trend lines, but this is another lesson. So what I do is I buy pullbacks, nothing else. Do not try to short while we have this situation. The fastest moving average is above the slowest one, and they are all sloping upwards. Do not try to sell unless you have another kind of strategy. If I go back, I want to show you this. Let's find a situation. Again, you see, for example, here, buy at pullback, buy at pullback. Over here, we have a situation where we sell. Now, let me address this issue about getting short. When the price moves below the moving average, okay, I'm sure you think this is the time to go short. Yes, but what you will not do under any circumstances is sell the low. Never sell the low. The risk reward is not in your favor. Again, especially in situations like this, when the price is below the moving average and the trend is down, unless there are extremely significant news, do not sell the low. Wait, sell into resistance, until it stops working. That's it. The reason we say this, it has to do with risk reward. We have done extensive studies, and I can tell you that trying to sell the low, it is not a good strategy. It doesn't give you a good Sharpe ratio. It doesn't have a good drawdown. It doesn't have a good risk reward. So don't do it. Maybe sometimes people use a stochastic. They might do this. They will use an oscillator, like a stochastic, to time the entry. But I will tell you the problem with this. So here is a stochastic oscillator. I will bring this here to the other screen. And they will say this, right, when the stochastic is high, sell into resistance. Resistance is here, we hit the moving average, sell. But now you see this in hindsight, and you might be thinking, oh wow, this is a fantastic strategy. But in reality, the stochastic is lagging. This is the problem. So you look back in time, you see the history in this chart, and you think, wow, this is fantastic. It touches the moving average, the stochastic is up, sell, sell. Or you can do the same if the price is going up and you wish to buy at pullback here, buy at pullback, buy at pullback, and while we are at support. But this will not work. This is the thing. Because there is a serious delay, there is a lag in the stochastic. This is why I don't like this and I am removing it. And I only stick to price action and the moving average. If you wish to have a more advanced version, then you can add trend lines, but this is again another lesson, or you can use traditional support and resistance levels. Then this becomes a little bit more complicated. But the main idea that you need to remember is this: buy pullbacks, sell retracements into resistance, never try to sell a breakout of a low, and use a higher time frame approach, a multi-time frame approach. I mean, you begin with the high time frame and then you move to the lower time frame. So I begin with the daily, highlight the level, and then I move to the 4 hour. I am not moving to smaller time frames. I will move minimum to the 4 hour time frame. So if I go here, you can see I'm still using the same conditions when it comes to the moving average, and I see the trend is up, and look what happens. The trend is up. You see, the support here at the moving averages is respected. Buyers here move up again. Well, here now we have a little bit of an overshoot, but this is why you need to look at the multi-time frame, and you are looking at the higher time frame analysis. It keeps going up. You know the trend is up because you are aware of this from the highest time frame. And again, you do business at the right areas. There are times that you see a structure like this when the moving averages are all moving horizontally and they are very close to one another, like as if they are one. That means we have ranging conditions and a trend following strategy will not work. So what we do? We use another kind of strategy that we are going to discuss in another lesson, and we sell highs, buy lows, we define the range, as you can see happening here. So can you see in how many different ways we use the moving averages? They help us to understand the structure, they help us to understand the trend, they help us to understand where to do business, especially if you start with the highest time frame analysis. And you can also use the fractal, this is something I didn't mention yet, to place your stop. But don't use it too tightly. Don't use too tight stops. I mean, do not try, you are not conservative, you are not managing risk if you have a stop too close to the entry. Pay attention to the range of the move, to how the price is moving, and use a stop that if the price is reaching that level, it means it completely changes direction. So use a technical stop. Do not use a stop based only on your P&L. So in this video, we covered how to use moving averages properly like a professional trader. And in the next video, of course, we are going to discuss how to use moving averages together with support, resistance, and trend lines. Thank you for watching. Stay tuned.